Hello, traders. It's 8:02 a.m. Chicago time on Monday, the 12th of August, 2019. Believe it or not, we're approaching the middle of August already. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This is episode number 1572. Thanks for joining me this morning. The overall market sentiment this morning is somewhat mixed, a little on the risk off side. We have the NASDAQ, which is a laggard today, down 47 points, trading at 7613 and a half, down 0.61%. Overall, it's looking like a bit of a nervous market here this morning. The headline really is risk aversion sentiment, eyeing Far East events, trade, and Hong Kong. In case you didn't know, Hong Kong saw the Chinese military move in yesterday, and that situation is looking like it's getting a little worse. Hong Kong closes airport as protests escalate. There's also, of course, the U.S.-China trade tensions. Trump stated that things were going very well with China, not ready to make a deal, added that September trade talks with China could be canceled. And then, of course, Italy, the Deputy PM Salvini said to try for confidence vote this week in order to force early elections. Just That's just some of the underlying, but right now the S&P is gapping down about 16 points or 0.5%. The Dow's down 140 points and the Russell's down 7 points. The dollar's off 11.5 cents, trading at 97.20 cents. And the bonds are up 28 ticks, with crude up 25 cents today, up 0.46%, trading at 54.75 on the September contract. Gold again is up to $1,512, even or about 0.25%. That's how things are shaping up this morning. In terms of overall news, scheduled events, looking at the high impact calendar for the week, we have the NAB business confidence out of Australia that gets released at 9:30 p.m. tonight. Tomorrow, however, Germany gets its inflation rate year-on-year final for July, expecting 1.7%. That comes out at 2 a.m. Eastern U.S. time. Great Britain's claimant count, the German zoo figure, core inflation tomorrow, as well as the inflation rate. And then Wednesday we get some numbers out of Europe, GDP, inflation rate, GDP growth out of Germany and the Eurozone, unemployment out of Australia, retail sales on Thursday, Michigan sentiment prelim on Friday, and balance of trade on Sunday night out of Japan. That's what's ahead this week. So we look at this, and the calendar's somewhat light this week, a little heavier in Europe than it is in the United States, but fairly light overall. Let's take a look at what we expected on Friday versus what we got in our review segment. So Friday, the primary expectation was a likely test down into about 29.20, 29.19 with a bounce up, and I expected the overnight high to be taken out for a push to 29.45, 29.48 or so. Did not happen at all. The secondary scenario was an inside day, an attempt at the high. Remember, we did leave behind on Wednesday. We left behind this really weak high at 29.40.50, and I did expect that in the overnight that night pushed it by a tick. So I expected a strong test up there at some point, and that's what drove scenario one. Scenario two is an inside day, an attempt at the high, fails, stay inside, and hold steady to finish. somewhere in the 29 area. Now, neither one of those worked out. There was a bit of a test higher. You could see it better in the trigger chart. Let me clean this up a bit. In the trigger chart, we saw a test higher, but nothing too promising. A lot of rotations. You can see the trigger charts very, very busy. A lot of two-tick Renko bars for that day. And so as we approach the open here, you could see there was that push that was discussed a little bit here in scenario 2, a push higher. I expected an open auction on the open, which we did get right in here. And I expected a push higher and then a push down into this 29, 19, 20 area, this key low volume node. And then my expectation was it would finish somewhere up here. But it didn't. It was relatively weak and continued to drive down. I found that it was really a price action trading on Friday more than anything else. The rotations, the counter rotations were not deep enough to really push um, for a clean structured trade. The only one I saw clearly was the test of the 19 and a pullback right here into the opening swing just below the VWAP and mid before the impulse down. That turned out to be the biggest rotation of the day at that point. And we continue to push down into the 2900 area and through. So we ended up squeezing down into 28.99, and as soon as we did, as soon as we squeeze down into 28.99, we immediately get the rotations expanding up, a consolidation at 2900, multiple attempts here to get below 2900 and stay below, just could not do it. And next thing you know, we have an expansion to the upside through the mid, very aggressive move up with some pretty aggressive delta to go with it. So there's some really strong lifting there coming into lunch here in Chicago. The ES ended up just working its way back to that initial the opening swing low and pushing all the way back up, almost to the IB high, almost looking neutral, only to finish somewhere in the middle. This day is, you look at that profile, and it's really this day really held that. I mean, this was a legitimate test, 2900. It held the 2900 area, was well defended, and the market ended up pushing strongly above there. I mean, that was a clean, clear short squeeze there once we couldn't hold below the 2900 figure right down here. I mean, this, once it pushed up, it tended to just stay in the middle, and that's where our point of control ended up being. Did not see a good taper at the low. The taper at the top is meh, not so great either. And it's kind of opened up, it opens up today for us to discover on both sides, in either direction. And notice that the overnight low ended up pushing to the gap. Now this is important. This gap area here down 28.92. This represents an MC low volume node that was a small gap that we left behind last week and holding the upper distribution of that composite. Let me show you that. So here we spent 3 days holding sideways, and then we broke higher, and then Friday was an inside day. So as I extend this profile forward, watch what happens. It builds up, it builds up, it builds up, many prongs. A lot of discovery there. And what it does is it ends up leaving us with this really clear, I know it's yellow on yellow here, really clear low volume node, which is exactly the low of the session, of the overnight session. And what this means is if the market's not able to hold this 29, we're trading at 2904 currently. If it's not able to hold this 2904 area and push higher and starts to move below 2900 and starts to move below 2900 and through 2893 and hold there, then we are very, very likely to test 2854, the MC point of control. This black line is the high volume price. So to me, 28.93 to 54, that's almost 40 points of range. We're likely to trickle down in here and start working through this volume that we left behind from the MC back into the 3-day balance that we left behind last week. If we're not able to hold 28.54, then we're looking at new lows and we start to make our way down into 2800, that century figure as well. And we start to push into 27.84 and so on, the next major area down. So to me, it'll be an interesting day. Now, it's a Monday, the lowest volatility day of the week historically in this product. But overall, we have some interesting structure to deal with here today, as we are trading very close to the low volume node, and the overnight session held the high volume node. So if you look at the overnight high, I know this seems like a lot of lines on here. Let me turn off the stock zones, clean this up. The overnight high is right on top of the high volume node in the upper distribution. So what it did overnight is it tested to that high volume distribution, came back down, tested down into the low volume node and held at the lower end of the low volume node. And so if it gives that up, this could be a pretty fast trip down to 28.54. That would be the big trade of the day if we do manage to work that way. So that's the review of what has happened. Here's another view. This is the overnight session. The overnight session started right here with this profile. This was Friday session right here. So this is Friday, and this is the overnight. Okay, so you could see that it pushed right into the MC point of control up top, which is partially formed by this. It pushed right into that before it violently sold off down through the 2900 and is really struggling to stay above. We're below mid, below VWAP. The point of control is down here. It has shifted down from 2906 down into this area. And is holding steady. To me, this looks like it is likely to spill lower. So that's the key play. What are we looking at for today in terms of plans? Set this chart up. Give me a second. Un moment, s'il vous plaît. Here we go. All right. The gray areas, if you're not familiar, these are stock zones. These are areas that I intend to do business if I see that the order flow supports it. It's crowded in here. We've got, an inside day, so there's a lot of structure there. But overall, what I'm looking for this morning is an open auction at the low end of the range. We're trading at the lower high volume node left behind from Friday. I'm looking for the market to actually pop higher and then make an attempt or a push at the 29.12, even to 29.19 up here. So I'm looking for it to make a push here, roll over, and then start to move below Friday's range in and through this 28.93. And I expect it, once it breaks through the 28.93, I expect it to fight here for a little bit and then turn into a stair step down on our way to 29.54. I'm not saying we'll get 29.54 today, but if it fails to hold this range from the last 2 days, a very high probability trade down to 29.54. Okay, that's scenario one. Scenario two is the contrary scenario, which is in line with what has happened over the last few days. We did consolidate down here. We did break higher. We had a trend day up on Thursday and we held on Friday. So what this is likely to do is test lower, pop up on an impulse up. So I'm going to put an impulse arrow right here, impulse up, push into the point of control, hold steady for a bit, and then start to work itself back and into 29.45, breaking that 40.50 40.50 at the top. So scenario one pushes to 28.54. Scenario two, break the 29.40 and push into 29.45.49. Again, this is a lot more volatility than you would expect on a Monday, so I'm probably extending the ranges too far here. Based on last week's action, we might see the range collapse today, and it just ends up being like a a 14-point day, in which case it would likely be an inside day, just holding steady, or not an inside day, but test below and then finish inside. But the more likely scenarios that we're likely to give up this 28.93 area and start working the lower distribution. I mean, there was a huge opportunity on Friday to open in an open auction and push that 29.40.50 higher, but where were the buyers? They were just not there. It would have been easier, it would have been a lot easier to push the high on Friday, but they weren't able to do that. So I'm expecting some of that kind of fear or whatever to come into today. And we saw that the overnight sentiment is on the sell side. That's what's driving my primary scenario. Okay. Does that make sense? I hope it makes sense to you. Good luck today. Remember, it is all about being patient. Let the market set up. Let it come to you. Figure out what your risk is going to be. And then take the trade and let the market decide what it wants to do with your trade. Once your trade is done, it is like putting a little paper boat in a stream of water. Let it carry it to where it ends up carrying it, as opposed to interfering with the trade and then wanting to slam your head on your desk because you keep interfering with trades. And by the way, if you're not sitting there monitoring your errors and journaling what you're doing every day, you are wasting your time as a trader. You will not be able to compete with other traders if you're not constantly monitoring what your performance is versus what's expected. Here's how the liquidity looked like overnight. Let me color this. We can see 29.10. There's a fair amount of liquidity sitting up here. This is CT Bookmap. You can find it at ctbookmap.pro. It runs on many different data feeds. So we have some liquidity here, 29.10 up above, potentially some in that key 19 area. So I'm going to be monitoring that this might thicken up as we push up this morning. If we push up, the green is the last print. And then below us, let me switch the range here. Below us, 28.90. So we have that 92, 93 area is important. That's a gap zone right there. 28.90, seeing a lot of liquidity that's been sitting here for quite some time. It's actually been sitting there since Friday, with some backup beneath it at 28.85, and that's likely to be a battle area here. So as we approach in here into the gap zone, we may see a bounce the first time. Not sure, but 28.90 has a little bit of liquidity there. It's likely to trade out. Okay, so we'll see. The first thing we want to see this morning, We're trading at 2902, 2902 half right now. The first thing we want to see this morning is, will it defend 2900? Will it defend 2900? If it does, then expect this to push through to 2890, where the next set of liquidity areas show up, and then 2885 below that. Okay. Good luck, and I'll catch you tomorrow morning. Take care.